Interesting to see how the market absorbs them too, as Walmart fell precipitously on the news and then just began to come back throughout the day towards the close. Big retailers casting a shaky outlook on the state of the consumer headed into 23. Walmart says it expects adjusted earnings per share to decline over the next year, a stark contrast from the upbeat hopes of Wall Street analysts. Here's what Walmart CEO Doug McMillon said about the health of the consumer.
I think you can see it in the mix impact. Customers are still spending money. When you think about our guidance and the place we positioned it, it's obviously not as clear to us what the back half of the year looks like as what we're experiencing right now and the momentum that we had coming out of the fourth quarter. But that's the way we would characterize them. They're making choices. We expect that to continue through the year.
And take a look at Walmart's e-commerce growth. That sales segment, 17% up the fourth quarter compared to 8.3% growth for U.S. same-store comp sales as a whole. Interesting to see that breakdown, not necessarily following along the trends. But when you listen to their CFO this morning, two things come out in terms of you look at the big picture. When you zoom out a little bit, he says that the consumer is really pressured, and on the macro, they are very cautious. And that's why they're projecting not a great number for 23. But when you look at the share price, come back, and as that bad news was absorbed, not as bad as initially feared.
Yeah, not as bad. I think there's lots of questions out there about how exactly Walmart is going to handle the next couple of quarters because, yes, they are seeing their consumer be pressured. On the flip side, they are seeing higher prices from some of their suppliers. Procter & Gamble, Unilever, saying that they will continue raising prices this year, putting Walmart in a pretty tough spot because they have to decide whether or not they are going to pass that higher price along to the consumer. If not, then, of course, that would further pressure their margins here going forward. The trade down, though, is something that we started to notice going back to last year. Certainly seems like that has continued with grocery, that division being a short standout here for the last several months for Walmart. Grocery sales increasing in the low 20% basis on a 2-year basis. So take a look at that type of growth in the grocery division. More and more people are choosing Walmart as they are having to make those tough choices of where to spend and how to spend their money.
Yeah, it was interesting to see them increase their market share in grocery, in particular because the higher income households are beginning to trade down to Walmart. That, to me, above all else, was the most surprising thing from the report, because we knew that people are spending less on goods. They're not going to buy the TVs. They're not buying as many gifts. We knew they're going to buy grocery, and that's what's going to sustain them. But surprising to see those higher income households trade down to Walmart.
It certainly really tells us a lot about the macro environment that we are in right now.